The target return we're looking for at GCI is in the high single digits. So unlike many other funds, this fund is not about seeking to maximise return. It's seeking to target a high single digit return and really focus on capital preservation and minimising risk to our investors. Our investment process starts at the asset level. What we're looking to do is identify different forms of credit that have become available through marketplace lenders. So these are types of credit that were typically only found on a bank's balance sheet. Once we've done research on those different kinds of credit, looking at the different risks, looking at the returns, we then seek to identify platforms or origination platforms where we can access and purchase that credit. We are attracted to the ability to really make an informed decision on each piece of credit or each loan that we might buy. So in order to do that, we've done enormous amounts of analysis, in some cases analysing more than 1 million loans, and we come up with algorithms or decision criteria which we then seek to apply as we're purchasing the credit from those platforms. So it's a very rigorous process. It involves our team making judgments, but it also involves significant analysis and data science. The first one is it's uncorrelated with other asset classes. So many Australian investors are invested heavily in shares and real estate. The credit that we're buying is uncorrelated to those assets. The second point is really around the short-term nature of the assets. So the credit that we're buying is 3-year credit, 3-year loans. Those loans typically pay back in around 18 months. Importantly, and this really goes to the third point, the loans are principal and interest loans. So unlike many other types of credit, we're getting paid our interest and principal from day one, and that interest and principal is available for distribution to investors during the life of the loan. So the other attractive aspect of that is that as interest rates may go up and down, and interest rates have been highly volatile really over the last decade, that gives us the option to redeploy funds as we see what's happening in the interest rate environment. So we also think this asset class is highly attractive versus bonds, because typically with a bond, you may receive your interest during the course of the bond, but you don't get your principal, you don't get any of your capital back until the end. So again, we think from a risk perspective, this gives us the ability to manage risk very prudently. The investment allows investors to get currency diversification. So given that our investments are in US dollars, investors who are seeking to have that diversification and not be completely exposed to the Australian dollar are able to get that exposure. The way we think about capital protection and risk management is really around trying to be as high up the credit curve as we can be. So GCI only buys prime credit. However, the further up the credit curve we can be, the most prime our borrowers can be, we believe that minimises our risk. So what we do is we run different scenarios which are linked to macroeconomic performance of the US economy. So we're tracking unemployment, we're tracking bankruptcies, we're tracking credit card defaults, a whole range of different credit indices. And we're continually stressing our portfolio, literally on a weekly basis we're stressing our portfolio to see what do we think would happen based on historical analysis, based on a whole lot of modelling that we've done, what do we think would happen to our portfolio? And what we're trying to achieve is even if the US goes into a strong, what we call a strong bear recession, that our portfolio would still return capital and give our investors a small return. Over the last few months at GCI, we've met with many high net worth and sophisticated investors, their advisors, a number of institutions. Investors are very excited about the opportunity to get a US dollar yield in a risk-controlled manner. Many investors have had US dollars earning very low yields, and this product is a real innovation from their perspective, and the feedback's been excellent.